Jean Fang, Associate Managing Director, Sovereign Risk Group, Moody's Investor Services. Jean, great to have you with us this morning, particularly, we've been going through the latest commentary coming in, from Moody's on India. I just want to understand from you, the timing of this, given the government's recent measures to kickstart growth, just share with us really the kind of rationale for this coming in at this time.
Sure. I think that we have taken consideration of the measures that the government has taken to kickstart growth. We do expect those to have a positive effect with some lag. I think that we do expect growth to tick up again next year to about 6.6%. So, in fact, we've factored that into our thinking. At the same time, we do think that there is considerable risk that growth will nevertheless remain lower for a longer period of time. And I think our rationale points to some more deeply embedded structural issues in the economy, and also the emergence of the potential credit crunch coming out of the NBFI sector.
Okay. What would you say, Jean, that the government needs to do in order to mitigate or eliminate these risks that you just highlighted to the economic growth?
Well, we are not really in a position to provide advice on policy, and we're really want to focusing more on the credit side. But one of the things that we have talked about in our press release is the fact that financial stress in the agricultural sector and sort of weak outcomes in the labor market are partly are factors that are driving weakness in consumption, and that may be more difficult to address in order to revive growth more strongly. And of course, these get back to land and labor reforms that have long been on the table, but obviously very difficult to tackle.
What are the metrics that you would be looking out for the further downgrade of the outlook? What are the parameters that would help you, understand and pick up on the nuances, whether there's an economic recovery coming in or whether things are even worsening further?
Sure. Again, I think the risks that we do see and the risks that underpin the negative outlook go towards a weaker than expected economic recovery and sort of a lower for longer growth path in the economy. That's going to feed into our view on the debt-to-GDP ratios that India has, currently a 67% government debt-to-GDP. We look for the trajectory of that debt-to-GDP to continue to stabilize and even decline in order to sort of resolve the outlook with a stable view. Obviously, if we see that trajectory begin to increase, that in other words, if we think that debt to GDP will be on an upward trajectory, that's more consistent with a downgrade.
Jean, I'm just looking at the terminology and the fact that the report says the government will not be able to help stunted economic growth. That's what stands out to me the most. And yet you're saying that, this is possibly temporary. We will see an uptick again next year. I'm trying to understand or pinpoint, where you see the most pain. You've talked about how income growth has been dampened. You've talked about how jobs are a concern. Low job creation is a concern. So, as we were just discussing, what then makes you feel we will actually see that uptick next year?
Well, again, as I mentioned before, the government has already taken some measures to help stimulate the economy. They've addressed low farm incomes. They've tried to provide aid to certain sectors, such as autos and NBFIs. But that impact will take some time to flow through the economy. I don't think the negative outlook, though, is really tied to sort of our near-term economic forecasts. I think the negative outlook indicates that we see risks in the more medium-term trajectory of growth for India, and that we will see a trajectory that is considerably lower for a longer period of time.
The only problem, Jean, here is that it's a bit of a vicious circle, because if the government does something on the policy front to try and push up and scale up the economy, that will definitely have a fiscal burden. To your mind, what are your internal GDP as well as fisc targets that you have for both the financial year as well as the near term?
I mentioned our near-term growth target. It's not a target, it's an estimate of 6.6%. I think that in terms of the fiscals, we do think that the government has is likely to miss its own fiscal deficit target for this year, and we think there's a risk that will also happen in the year going forward. So I think that we do see probably a little bit more weakness on the fiscal side than what the government has in mind, and I think part of that is driven by, as you mentioned, the slow growth, which can have a negative effect on fiscal outcomes. So, I mean, I think we have some near-term targets in mind, but again, I think the outlook is really pointing to the more medium to long-term risks that growth doesn't revive to a more robust level that puts the debt-to-GDP trajectory on a declining slope.
Okay. Again, just to sort of understand, because the terminology is so strong, so I want to get a sense of how serious this is. A, compared to perhaps other emerging economies at this point of time, and B, since you're saying medium to long-term risks, are you saying there's a threat of this being a larger structural slowdown?
Yeah, I think partly that's what we're pointing to, the risk of this being a larger structural slowdown. In terms of comparables, I think India's debt to GDP at 67% is significantly higher than other peers in sort of the BAA rated space. The peers in the BAA space have a median debt to GDP ratio of around 52%. So that's why debt to GDP is really sort of one of the biggest challenges that India faces from a credit perspective.
All right. So the debt to GDP is the biggest, sort of threat there. We're also counting down to the next trigger. I think will, of course, be the budget. So how closely will you be watching that, or are you anticipating anything else that the government may announce before that could help to alleviate some of those concerns?
Well, we always watch the budget very closely, but again, I'm not here to necessarily provide policy recommendations or indicate anything in particular that the government needs to do in response. We obviously watch the budget very, very closely. We'll be seeing how the stimulus measures that the government has already made play through, and I think those will be the factors that we want to keep an eye on.
Okay, Jean, good to have you on the show. Thanks so much for taking the time out and speaking with us, and we'll chat again once you do, revise your outlook on India.